Hi everyone and welcome back to today's report with me, Richard Perry, market analyst at Tech Markets for Monday the 2nd of June. I'm going to look at sterling dollar now, and sterling has, to be honest, it's giving a few mixed signals at the moment. It's had this big breakdown of the uptrend on this chart that's been in place since November, which I will quickly draw for you. That uptrend has now been broken quite decisively, but this 89-day moving average, which is this blue line here, has not been broken. Now that has been supportive of the last few major corrections, and that remains intact, and that comes in at 66.89. Thursday's low, 66.91. So clearly, that is a level now we need to be watching out for. Friday had a nice jump higher, but you would certainly say that the mixed signals got this broken uptrend in place here, and also the fact that we've got a confirmed lower high as we've fallen below the reaction low. So you would say that near-term rallies are being sold into, but on the longer-term basis, that trend, that 89-day moving average is still supportive. So a little bit of a mixed outlook on here, but I think what we need to be looking out for is this resistance. It's around 68 big figure. This has been a fairly key resistance, or key old support turned into resistance for a while now, and I think that needs to be watched as a rather significant pivot level. If we can look at that, I'll probably be focusing on that throughout this week with the big data that's coming out. But at the moment, I think, as I said, rallies now are being sold into. So we just need to be focusing on that. I think we've got fairly significant resistance coming in around 67.80 as well. So 67.80 towards 68 figure is a fairly sizable basis of resistance in place now. In terms of what we see in very recent minutes, is that the UK PMI has come out, and that's actually been in line with expectations, 57.0. But the reaction has been for sterling to fall away on the back of that, and it looks like it's going to be testing this 67.24 support is the immediate level, and then underneath that is the low from Thursday at 66.91. But it looks like, as I said, that the reaction is a negative on cable. As I said earlier, daily morning report main overview, the dollar has been strengthening throughout the morning, and that's actually pulled cable lower now. The cable was up quite around 15 pips at one stage. It's now down 20 odd pips. So rather a sizable turnaround in cable from the early morning. Slight amount of strength there for the cable, but certainly that has now been completely turned around, and we're looking at cable weakness to the downside. So it looks like these supports will be tested. Certainly if that ISM number now comes out positively, that will put further pressure to the downside, strengthening the dollar and pulling cable lower. So 66.91 is the initial support, but much beyond that you'd have to be looking at the daily chart once again. The low that we saw, 66.80, could also come under pressure, and that, I believe, is a key low. Certainly that would suggest we're beginning to then break that 89-day moving average, and also that reaction low from the April support there as well. So a couple of levels to be watching out for on the downside. Okay, well, I wish you good luck in the trading on the cable today. Don't forget, as I said, 3 o'clock ISM number. That can have a big impact on this chart. Okay, I will speak to you later. Thank you.